Welcome back, everybody, to another deep dive. You know we love getting into company financials around here. And today we're looking at something kind of interesting. Uflex Limited.
Yeah, this company's kind of under the radar, but they are huge GE in the global packaging industry, and it's actually pretty fascinating.
You're telling me, I mean, I've never even heard of them, but then when I started doing research, I realized, I've definitely held their products.
Exactly.
Yeah.
Think snack pouches, those little juice boxes with the straws, all kinds of stuff.
Oh, wow. Yeah. No, I mean, that makes sense. So they're like a behind-the-scenes giant kind of thing.
Yeah, that's a good way to put it.
Yeah.
And what's really cool is they're not just churning out packaging. They're actually trying to be leaders in sustainability and innovation in the whole industry.
Okay, so they're not just keeping the lights on. They're trying to actually, change things up a bit.
Exactly.
Yeah.
So as we go through their latest quarterly report, you'll see what I mean.
Mm.
They're making some pretty big moves.
Okay, I'm intrigued. Let's get into it then. Where do we even start with a company this big?
Well, the headlines from Q2 of fiscal year 25 are a good place. Their revenue is up a solid 4.6% compared to last quarter, and even more impressive 13.7% year over year.
Whoa. Okay, so they're not just growing, they're growing fast.
Right. And they hit a total of Rs, 38,532 million in revenue, which is a lot of rupees.
Yeah, no kidding. I'm assuming their packaging films segment is the big driver there.
You got it. That's their bread and butter. But hold on. There's another piece to this puzzle, their normalized EBITDA.
EBITDA. Earnings before interest, taxes, depreciation, and amortization.
Right. You know your acronyms. It's up 7.4% year over year, which sounds great, but it's actually down 5.8% from the last quarter.
Okay, so that's a bit of a mixed bag. Revenue is up, but EBITDA is down. What's the deal with that?
It's likely due to some of those global economic challenges everyone's talking about.
Yeah.
Energy costs, especially in Europe, have been nuts. And there's also the delayed impact of rising raw material prices.
Oh, yeah, I remember reading something about that. So basically, even though they're selling more stuff, their profit margins are getting squeezed a bit.
Yeah, exactly. It's like that saying, what goes up must come down. But in this case, maybe not all the way down, because their sales volume is still way up.
Okay, so how much are we talking?
A significant 10.9% year over year, reaching 167,294 metric tons. That's a lot of packaging.
No kidding. They are really moving product. And you said the packaging film sales were up even more.
Yeah, big time. Packaging film sales jumped a massive 14.6%.
Okay, so despite the economic headwinds, they're still selling a ton of stuff. What's their secret?
Well, part of it is that they're not just riding the wave, they're trying to stay ahead of it. They're making some big strategic investments, and you can see that reflected in their capital expenditures this quarter.
Investments, what are we talking about here? New factories, fancy equipment?
Both, actually. They've got some major projects in the works. Take their expansion into Egypt, for example. They're building a massive new facility to produce virgin pea chips.
Pea chips, what are those?
They're basically the little pellets that are the building blocks of so many plastic products. Think water bottles, soda bottles, all that stuff.
Oh, okay. Yeah, I kind of get it. So they're getting into the raw materials game.
In a way, yes. And this plant is going to be huge, with the capacity of 216,000 metric tons per year.
Wow, that's a lot of plastic pellets. And that's not all right. They're also building something else in Egypt.
You got it. On top of the PET chip plant, they're also putting up a massive aseptic packaging facility.
Aseptic packaging. Now, that's something I actually know a bit about. It's like those juice boxes and those shelf-stable milk cartons.
Right.
You know your stuff. And this facility is going to be capable of churning out 12 billion packs a year.
Whoa. Okay, so they're going all in on aseptic packaging in Egypt.
Exactly. This move is a clear signal that they want to be a dominant force in that market, not just in Egypt, but potentially in Europe and beyond.
So it's like they're setting up shop right at the source of the raw materials and then using those materials to make a high-demand product.
Exactly. It's a smart strategic play. And they're not stopping there. They're also making investments in Mexico.
Mexico. Interesting. What are they doing there? They're putting in a new CPP line and a coating line. CPP stands for cast polypropylene. It's a type of plastic film that's used for a lot of different things.
Okay, so they're expanding their film production capabilities in Mexico.
Got it.
Right. And Mexico has been a really good market for them. They've seen impressive growth there. So this is about solidifying their presence in North America.
So they're expanding globally while also strengthening their existing markets. Smart.
Exactly. It's all about diversifying their global footprint. And speaking of diversification, let's not forget about their home turf in India.
Oh, right. India. What are they up to over there?
They're working on something called a debottlenecking project at their aseptic packaging plant in Sanand.
Debottlenecking. That sounds kind of technical.
It basically means they're making their production process smoother and more efficient, like streamlining things.
Okay, yeah, that makes sense. So what's the goal of this project?
To boost production capacity from 7 billion to 12 billion packs a year.
Wow. Okay, so they're really ramping things up in India. Yeah, they're looking to capitalize on the growing demand for packaged products within India itself.
Makes sense. It's a huge market with a lot of potential. So I've got Egypt, Mexico, India. They're really covering their bases globally.
Right. It's a classic two-pronged approach, expanding globally while also strengthening their core markets.
So it's not just about size, it's about having a presence in all the right places.
Right.
You
Yeah.
got it.
This reach across the world isn't just about scale, it's about building resilience. Uflex is setting themselves up to weather any economic storms that might pop up in different regions.
And also to meet the unique demands of each market.
Right.
Because what works in Egypt might not work in Mexico.
Exactly. It's about being adaptable and responsive to the specific needs of each region.
Okay, so let's talk a little bit more about this global reach. I'm really curious to see how their production volume breaks down across their different locations. Do we have that data?
We do. And it's actually pretty interesting. In this past quarter, India led the way, contributing 24% of Uflex's total packaging film production.
Okay, so India is their biggest producer at the moment.
Thank
What
you.
about the other regions?
Well, Mexico is the rising star. Their production volume skyrocketed by an incredible 50.3% year over year.
Whoa, okay, that's a huge jump. They're really killing it in Mexico.
They are. But there's also something interesting happening in Dubai. Their production volume there is actually down 9.3% year over year.
Okay, so that's a bit of a contrast. Is that a cause for concern?
Not necessarily. Remember, numbers don't always tell the whole story. There could be a number of factors at play in Dubai.
Like what?
Maybe there's been a shift in regional demand or they've tweaked their product mix there. It could even be a strategic decision to adjust production capacity. We need more information to really know.
Fair enough.
Yeah.
It's a reminder that we need to look at the whole picture, not just one or two data points.
Exactly. Now, another interesting thing I noticed is that despite their revenue growth, their normalized PO profit after tax came in at Rs 280 million.
Okay, and what's the significance of that?
Well, it translates to a normalized POT margin of just 0.7%, which seems a bit low considering how much their revenue has increased.
Yeah, you're right. That does seem a bit out of whack. What's going on there?
Well, profitability can be affected by a lot of different things,
Mm.
especially for a global company. Like Uflex currency exchange rates, for example, can play a big role.
Oh, right, because they're dealing with multiple currencies all over the world.
Exactly.
Yeah.
And in this case, they actually experienced a total currency loss of Rs 926 million due to currency devaluation in Nigeria and Mexico during Q2.
Whoa. Okay, so they lost almost 1 billion rupees just because of currency fluctuations.
Yep. It's a risk that comes with doing business globally.
Yeah.
But here's the thing. That loss is actually smaller compared to the previous quarter where they lost Rs 1,807 million.
Oh, okay, so it's actually an improvement.
It seems like it. It
Mhm.
suggests they might be getting a handle on managing those currency fluctuations.
So it's like a work in progress, but they're moving in the right direction.
That's how I see it.
Yep.
It shows they're actively managing a complex global financial situation.
Okay, so that's their financial performance. Pretty impressive overall. But you mentioned something earlier about sustainability. I'm really interested to hear about that because honestly, sometimes it feels like companies just pay lip service to sustainability without actually doing much.
I hear you. But with Uflex, it seems to be different. They're actually taking concrete steps to address the plastic waste problem with their Project Plastic Fix initiative.
Project Plastic Fix. Okay, that sounds promising. Tell me more.
It's a multifaceted approach to creating a circular economy for their packaging. Basically, they're trying to make sure their packaging doesn't just end up in landfills.
Okay, I like that. So what exactly are they doing?
Well, first of all, they're making sure they're in line with India's extended producer responsibility guidelines.
Yeah.
These guidelines require companies to set recycling targets and use a certain amount of recycled content in their packaging.
So it's not just voluntary, they're actually being held accountable.
That's right. They're taking responsibility for the entire life cycle of their products, which is huge.
Okay, what else?
They have recycling plans all over the world, taking PE bottles and other plastic waste and turning them into reusable materials. They call this their Waste to Wealth initiative.
Waste to wealth. I like that. It's catchy and it makes sense, turning trash into treasure.
Exactly. And they're not just talking about it, they're actually doing it. In just the first half of this fiscal year, they recycled 5,345 metric tons of PCR PPE bottle trash.
Hold on, PCR PET. What's that?
PCR stands for post-consumer recycled. So basically, it's plastic that's already been used by consumers and then recycled.
Okay, so they're taking old bottles and turning them into new stuff.
Well, cool. And how many bottles are we talking about here?
Well, that 5,345 metric tons is equivalent to about 385 million bottles.
Whoa, okay, that's a lot of bottles. They're not messing around.
They're serious about this. But recycling is just one piece of the puzzle. They're also doing some really innovative things with the materials themselves.
Oh, really? Like what?
They've developed something called Asclepius films. These are special films that are made with up to 100% post-consumer recycled PET content. So they're making new packaging from old packaging. That's amazing. Are these films, like, as good as the regular ones?
Actually, they're even better in some ways. They've been awarded the prestigious Kingfisher certification for their sustainability.
Kingfisher certification. That
Yeah.
sounds impressive. What is that?
It's a globally recognized certification for products that meet incredibly strict standards for environmental performance, social responsibility, and overall quality.
Oh, wow. Okay, so it's a big deal.
It is. It's a huge stamp of approval in the sustainability world.
Right.
So Uflex is not just recycling, they're also creating high-quality sustainable products.
Okay, so what about the fourth part of their Project Plastic Fix? You said it's multifaceted?
Right. The final piece is their pyrolysis plant in Noida.
Pyrolysis. Now,
And
there's a word I haven't heard in a while. What is that again?
it's a process that uses heat to break down materials like plastic into simpler substances.
Okay, and what are they doing with this pyrolysis plant?
They're taking 6 tons of discarded plastic waste every day and converting it into usable fuel.
Wow, okay, so they're literally turning trash into fuel. That's incredible.
Right. It's another example of how they're finding innovative ways to turn waste into a valuable resource. And it helps them reduce their reliance on fossil fuels.
So it's good for the environment and good for their bottom line. It's a win-win.
Exactly. Uflex is proving that you can be both profitable and environmentally responsible. It's not an either situation.
I'm really impressed with their commitment to sustainability. It's not just talk. They're actually walking the walk.
I agree. They're setting a great example for other companies in the industry.
Okay, so we've talked about their financial performance and their sustainability efforts, but there's another key ingredient to their success that we need to explore: innovation.
You're right. They're constantly pushing the boundaries of packaging technology. They've got a whole R&D team dedicated to coming up with new and better solutions.
Okay, give me some examples. What kind of innovations are we talking about here?
One that stands out is their development of BTMA films.
BTMA films. What are those?
They're specially designed for high-performance sealing in pharmaceutical packaging, particularly for syringes.
Oh, wow. Okay, so they're ensuring the safety and integrity of medical supplies. That's crucial.
Absolutely. And they're also innovating in other areas, like their 3D pouch with a handle.
A 3D pouch with a handle. What is that for?
It's actually a first in the biofertilizer industry. It offers better shelf presence and is more convenient for customers to use.
Okay, so they're thinking about functionality and user experience. They're not just creating packaging, they're creating solutions.
Exactly. And that's a key takeaway here. Uflex isn't just keeping up with the trends. They're actively anticipating future needs and finding innovative ways to meet them.
I love that. They're not just followers, they're leaders. So before we wrap up this part of our deep dive, I just want to take a moment to appreciate just how global Uflex really is. I mean, they have 16 manufacturing facilities strategically located across 5 continents and 9 countries.
It's incredible, right? Their reach is truly global. They boast that they can deliver products anywhere in the world within 15 days.
Wow, 15 days. That's impressive, especially for a company that deals with physical products.
Right. That kind of agility and responsiveness is invaluable in today's fast-paced world. And it's not just their manufacturing. They're also vertically integrated across the entire packaging value chain.
Vertically integrated. You mean they control every step of the process?
Pretty much, from resins to films to flexible and aseptic packaging, they're involved in every single stage.
So they're not just a packaging company, they're a packaging ecosystem.
You got it.
Ah.
And that gives them a lot of control over quality, efficiency, and responsiveness. It's a huge advantage.
Okay, so last thing before I move on, I'm curious about the overall landscape of the packaging industry in India specifically, because I know India is a huge market with a rapidly growing population and economy. What's the outlook there?
The outlook is incredibly positive. The demand for packaging is skyrocketing. Think about it. As more people enter the middle class, they're buying more packaged goods, everything from food to consumer products.
That makes sense. So it's like a rising tide lifts all boats.
In a way, yes. But Uflex is more than just a boat. They're a well-equipped ship ready to ride that tide.
And they're doing it with a focus on sustainability, which is really encouraging. They understand that the future of packaging is inextricably linked to responsible environmental practices.
Absolutely. It's not just a trend for them, it's a core part of their business strategy. They're proving that you can be a successful global packaging company while also being a leader in sustainability and innovation.
Couldn't agree more. Now, before we dive into the next part of our analysis, there's one more thing I'd like to touch upon. Uflex's impressive track record of building strong, long-lasting relationships with its customers.
Yes, they have partnerships with some of the biggest names in the world, like Nestle, PepsiCo, Mondelez. These are global giants.
And it's not just about landing a deal, it's about fostering genuine partnerships based on a shared commitment to quality, innovation, and excellence.
Exactly. They're not just suppliers, they're collaborators working together to create the best possible packaging solutions.
That's a great note to end this part of our deep dive on Uflex, is a company that's not just meeting the needs of today, but also shaping the future of the industry.
Absolutely. And we've only just scratched the surface. There's so much more to explore.
Well, then let's dive in. In the next part, we'll delve even deeper into their financials, their efforts to create a truly circular economy, and what all of this means for the future of packaging.
Can't wait. All right, so let's pick up where we left off and get deeper into USEX's financials. One thing that really stands out to me is their transparency in their earnings presentations. They give us a super detailed breakdown of everything.
Yeah, I noticed that too. It's pretty refreshing. It definitely makes me feel like they're not trying to hide anything.
Exactly. It builds trust, and it lets us really dig in and see what's driving their performance.
Okay, so let's talk numbers. What's their standalone financial performance looking like?
Well, their standalone revenue for Q2 FY25 came in at a solid Rs. 19,690 million.
Okay, and how does that compare to last quarter and last year?
It's a 5.1% increase from the previous quarter and a pretty healthy 19.3% jump year over year. So they're definitely on an upward trajectory.
Yeah, that's some solid growth. And what about their earnings? Is that growth translating into profits?
Yeah, for sure. If you look at the first half of FY25, their standalone revenue hit Rs. 38,430 million. That's a 15.7% increase compared to the same period last year.
Wow, okay, so they're consistently growing. What about their EBITDA?
Also looking good. Their EBITDA in Q2 reached Rs. 2,152 million with a margin of 10.9%.
Okay, and how does that margin compare to previous periods?
Well, it's dipped a tiny bit compared to last quarter, but it's still a significant improvement from the 10.2% margin they had in Q2 FY24.
Okay, so even though there's been a slight dip, the overall trend is still positive.
Exactly. And remember, EBITDA can fluctuate because of things like changes in raw material costs, energy prices, even currency exchange rate.
Right, all those external factors. So it's more about the overall trend, which seems to be heading in the right direction.
You got it. Now let's get to the bottom line. The standalone profit after tax for Q2 FY25. Okay, hit me with it. It came in at Rs. 377 million with a margin of 1.9%.
So they're profitable, which is good, especially considering how much uncertainty there is in the global economy right now.
Exactly. They're navigating those choppy waters pretty well. And their earnings per share, or EPS, also reflects this positive trend.
Okay, break that down for me. What's their EPS doing?
Well, in Q2, it was Rs. 5.23. It's a big jump from the Rs. 2.89 they reported in the same quarter last year.
Okay, so that's good news for investors. It means their investment is actually growing in value.
Right. Now let's zoom out and look at their consolidated financial performance. This takes into account all their global operations, not just the standalone business in India.
Okay, so this is the big picture stuff.
You got it. Their consolidated revenue for Q2 FY25 was Rs. 38,532 million.
Okay, another big number. How does that compare to previous periods?
That's a 4.6% increase quarter over quarter and a pretty impressive 13.7% surge year over year.
Wow. Okay, so they're a global force to be reckoned with. No doubt about it.
Agreed. And that growth is coming from a few different places. Increased sales volume, better pricing in their packaging film segment,
Wow.
and, of course, their expansion into new markets.
Right. We talked about all that earlier, but didn't we also say that their consolidated and normalized EBITDA margin had decreased a bit?
We did. It went down to 11.4% in Q2 FY25.
And what was the reason for that again?
It was mainly due to those higher energy costs in Europe and the delayed effect of rising raw material costs. It just goes to show that even the best companies can get hit by these global economic factors.
Yeah, no company is an island. So what was their actual consolidated normalized EBITDA in rupees?
Well, even with that slight margin decrease, it still reached Rs. 4,383 million. That's a 7.4% increase year over year. So they're still doing pretty well, all things considered.
Yeah, they seem to be managing their costs effectively. which
Yeah.
is impressive given all the external pressures.
Absolutely. It shows they're making smart decisions and being adaptable. Now, their consolidated normalized PAT for Q2 FY25.
Okay, their profit after tax.
Right, that came in at ours, $280 million, with a margin of 0.7%.
And that low margin is mainly because of the currency exchange rate stuff we talked about earlier.
You got it. Those fluctuations in the Nigerian naira and the Mexican peso really hit them.
Yeah, it's a reminder that doing business globally comes with its own set of challenges.
For sure. But it's also worth noting that their consolidated debt is rated pretty highly. AA by CRISIL and IND by India Ratings.
Okay, so what does that mean exactly?
It means they have a strong credit profile. They're seen as a reliable borrower, which is important because they've been taking on some debt to fuel their growth.
Oh, right. All those investments we talked about earlier.
Right.
The new plants, the expansions.
Exactly. And their management has said they're confident they can pay down that debt as those projects start generating revenue.
So it's a calculated risk, but it sounds like they've got a plan.
They do. Now let's shift gears a bit and talk about their Project Plastic Fix again. I think this is one of the most exciting things about Uflex.
Agreed. It's great to see a company taking real action on sustainability, not just talking about it.
Right. And they're going all in on creating a circular economy for their packaging.
Which is a huge undertaking. So how are they actually doing it?
Well, they're investing in recycling infrastructure, for one thing. They're building more plants and expanding their existing ones.
Okay, so they're making sure they have the capacity to actually recycle all this material.
Exactly. And they're also developing new packaging materials that are made from recycled content. Remember those Asclepius films we talked about?
Oh, yeah, right?
Yeah.
The ones made from recycled PET bottles.
Yep, those are a big part of their circular economy strategy.
So they're closing the loop, making new packaging from old packaging.
Exactly. And they're working to make sure everyone's on board. They're working with suppliers, customers, even governments to make sure their packaging is collected and recycled properly.
It's like a whole ecosystem approach. They're not just focusing on their own operations, they're trying to change the whole system.
Right? They're trying to create a systemic shift. And that's what's really exciting about it. They're not just doing this for PR. They're doing it because they believe it's the right thing to do and the smart thing to do.
It makes sense. Consumers are becoming more and more eco-conscious. They want to support companies that are doing good for the planet.
Exactly. And Uflex is positioning themselves as a leader in that space. They're showing the world that sustainability and profitability can go hand in hand.
Now let's talk about their global manufacturing footprint for a minute. It's pretty mind-blowing. 16 plants across 5 continents and 9 countries.
It's impressive. And it gives them a huge advantage. They can be close to their customers, reduce transportation costs, and be more responsive to local market demands.
Makes sense. It's all about being agile in today's global economy.
Exactly. And they don't just parachute in. They have local teams with deep knowledge of each market. They understand the cultural nuances, the regulatory requirements, everything.
So it's not just about having a physical presence, it's about having the right people on the ground.
All right? They've built a truly global organization, not just a collection of subsidiaries. And they've also set up business centers in key markets like Mexico and the U.S. to really connect with their customers.
That's smart. Having those local touch points is crucial.
Absolutely. It's all about building relationships and understanding the specific needs of each market.
Okay, last but not least, let's talk about their management team. They seem to be a pretty experienced bunch.
They are. They've got an average tenure of over 25 years in the industry. So they've seen it all. The ups and downs, the booms and busts.
That kind of experience is invaluable. They've navigated all kinds of challenges. They know what works and what doesn't.
Exactly. And they're not afraid to adapt. They're constantly learning and evolving. And they're investing in their team, making sure everyone has the skills and knowledge to stay ahead of the curve.
That's so important in today's fast-paced world. Things are changing all the time. You got to be able to keep up.
For sure. And Uflex's management team seems to get that. They're not just focused on today. They're thinking about the future. And they're building a company that can thrive in the long run.
It's impressive. They're not just a packaging company. They're a leader, a disruptor, a force for positive change.
Well said.
All right, so we're back and ready to wrap up our deep dive into Uflex. We've covered a lot of ground so far. Their financials, their sustainability initiatives, their global reach. It's a pretty impressive company.
Yeah, no doubt. They're really firing on all cylinders. But there are a couple more things I want to touch on before we wrap things up.
Okay, let's hear it. What else is there to uncover?
Well, one thing that's always interesting to look at is a company's shareholding pattern. It gives you a sense of who owns the company and who has a stake in its success.
Yeah, that makes sense.
Yeah.
So what's the story with Uflex? Who are the big players?
As of September 2024, the promoter group holds a pretty significant chunk of the company, 44.58% to be exact.
Wow, okay, so the founders still have a lot of skin in the game. That's
Yeah.
a good sign, right?
It is. It shows they believe in the company's long-term vision, and they're committed to its success.
It's not just about making a quick buck and then bailing. They're in it for the long haul.
Exactly.
Yeah.
Now, the rest of the shares are held by a mix of institutional investors, like foreign institutional investors, financial institutions, mutual funds, that kind of thing.
Okay, so a pretty diverse group of investors. Is that a good thing?
Generally speaking, yes. It means there's broad-based confidence in the company. Different types of investors with different investment strategies all see potential in Uflex.
So it's not just one group betting on them, it's a whole bunch of different players.
Right. And that diversity can actually provide some stability, especially during times of market volatility.
Makes sense. Okay, so we've got the ownership structure figured out.
Yeah.
What else do you want to talk about?
Well, this might seem a bit dry, but I think it's important to mention their auditor information
Auditor information. Okay, I'm listening. Why is that so important?
because it's all about transparency and accountability, especially for a global company like Uflex.
Right, right. Investors want to know that the company's financials are being properly scrutinized.
Exactly. And Uflex is audited by some of the top firms in the world. In India, they work with Lodha and Co. LLP and Vijay Segal and Co. And globally, they're audited by firms like BDO and Crow LLP.
Okay, so those are all big names in the auditing world. That's definitely reassuring.
It is. It gives investors confidence that Uflex is following the rules and their financial statements are accurate and reliable.
Transparency is key, especially in today's world where there's so much distrust of corporations.
Couldn't agree more. All right, so I think we've covered just about everything. We've really gone deep on Uflex.
We have. It's been a fascinating journey. I feel like I've learned so much about this company and about the packaging industry in general.
Me too. It's amazing how much complexity there is behind something as seemingly simple as packaging.
Right. I mean, you never really think about all the work that goes into those pouches and boxes and bottles, but it's a huge industry,
Yeah.
and it's constantly evolving.
Exactly. And Uflex is right at the forefront of that evolution. They're not just keeping up, they're leading the way. With their focus on sustainability, innovation, and global reach.
They're really setting a new standard for the industry.
I think so. And they're proving that you can be a successful global company while also being a responsible corporate citizen.
Absolutely. All right, so as we wrap up this deep dive, what are some key takeaways for our listeners? What do you want them to remember about Uflex?
So I think the biggest takeaway is that Uflex is a company to watch. They're doing some really innovative and exciting things. And they're not afraid to take risks and push the boundaries.
Yeah, they're not just following the trends, they're setting them.
Exactly. And they're doing it all with a focus on sustainability, which is something we should all be paying attention to.
Couldn't agree more. Well, this has been another fantastic deep dive. Thanks for joining us, everybody.
Always a pleasure. And remember, keep asking questions, keep learning, and keep diving deep.
See you next time.